Hi, I'm Manish Gunwani. I am the CIO Equities of Nippon India Mutual Fund and the fund manager for Nippon India Growth Fund. Nippon India Growth Fund is one of our flagship funds, and in fact on Feb 3rd, 2021, it crossed a NAV of 1500, which is a very big milestone. Nippon India Growth Fund is a mid-cap focused fund with 68.5% assets in mid-caps and 10 to 20% each in large cap and small cap. Let me talk about the strategy of the fund. The fund is basically positioned on mid-cap companies which have the potential to grow into large companies or large caps. Typically, we believe four verticals grow faster than GDP. These are consumer discretionary, healthcare, financials, and outsourcing to large corporates which could cover segments like IT, chemicals, etc. Most of our core positions are in these verticals. While we are not very benchmark centric, at sector levels we make sure that the portfolio is not very different from the benchmark. We run a diversified portfolio which has a fair amount of stocks, but what we do is ensure that the top 40 stocks are roughly about 75 to 80% of the portfolio. Coming to the current positioning of the fund, when we look at the macro picture, we believe that after the corona crisis, which is a once in a 100-year kind of crisis, the economy is following a very traditional path, both the global economy and the domestic economy. So after the recession, there has been a very strong fiscal and monetary stimulus globally, which is the highest ever, which is why what we are seeing is a very strong recovery in the global economy. And the interesting part is on the domestic side, the policy which was more focused on macro stability for last 5-6 years, now there is more focus on growth. So both fiscal and monetary policy on the domestic side today are engineered to revive the growth in the economy. And the positive part is also that the Indian rupee is more competitive versus the last 5-6 years because it has depreciated against most other currencies. Coming to the themes we are positive on, given our view that growth is likely to revive both in the global economy and the domestic economy, we like cyclicals like banks, NBFCs, real estate, cement, steel, etc. And these make up a sizable part of the portfolio. The other theme we are positive on is out of home consumption, which got hit by COVID badly but is likely to revive going ahead. This covers segments like beverages, retailing, multiplexes, etc. Finally, on the structural side, we believe that the outsourcing theme continues to remain strong, covering segments like IT, chemicals, electronic manufacturing, etc. Given that global growth is reviving, demand is likely to be strong. The shift from China to India in manufacturing continues to gather momentum. And we believe that the market cap of the Indian companies in this space is quite low versus the potential opportunity size that they can reach. In terms of the segments we are underweight, we are very cautious on segments which are impacted by technology disruption. So if you see globally, electric vehicles, OTT platforms, renewable power, they are replacing traditional auto, TV broadcasting, thermal power, etc. So wherever the stocks are getting affected by this disruption, we are underweight. We also believe that certain stocks in defensive sectors like FMCG, pharma, etc. are still very expensive, and therefore we are underweight them as well. Overall, we believe that the portfolio of Nippon India Growth Fund is balanced between structural stories and cyclical stocks. Nippon India Growth Fund may continue its rich history and may help investors create long-term wealth. All the best with your investments.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.